Hi, Tom Peregoodoff, President and CEO of Apollo Silver Corp. We are a U.S. silver story advancing our Calico project in San Bernardino County, California.
And now you are in London.
And now I'm in London as part of marketing over here in Europe.
Yeah, I think we've seen a kind of swathe of Canadians and North Americans come over and do the kind of European tour. I mean, how's it all going?
Look at, I've got to say I've been really happy with the way London has turned out. There's a lot of investors here.
Yeah.
And there's, generally what I've seen over the last couple of years, there was, the numbers are up.
Yeah.
But I think more so the numbers of truly interested and genuine investors is up.
It's fascinating. We've heard this a lot this past few days, where we're seeing institutional guys kind of coming in and looking for these big development stories that they can put their money into, so slightly lower risk for them. But that kind of cascades down, has that kind of knock-on effect.
Agreed.
Which is quite good. Green shoots is a phrase that I've heard a lot as well this week. So the nature of the sorts of conversations you've had so far, or what?
Look, I would say that of the very busy day I had yesterday and so far today, I would say 95% plus are new people that are showing interest in the story. The feedback I'm getting is like the story, like what you guys are doing.
Yeah.
Think now is the time. Think we're seeing the bottom of the market, and I'm now, looking at you guys as this is my my entry point.
That's the big question that people have been trying to answer over the past, I guess, 3-4 months is the bottom in yet?
Sure.
They want to know that they can maximize their return. Yeah. It would be great if it was the bottom, wouldn't it?
Yeah.
But I'm also interested in you said about new investors looking, right? For new investors looking in, you look like a steal, right?
Yeah.
Your current shareholders perhaps a little bit less enamored with where we're at, right?
Yeah, look at it, and there has been some conversations and some discussions around where we're at for the current shareholders. But they still understand that we've got the combination of the team that we've put together. We've got the asset, and we're advancing the asset much along the lines of what we said we were going to do. A year ago, I think you and I sat in a very similar room, and I introduced Apollo and Calico to the market.
Yep.
And I think if people go back and look at what we talked about there, they'll see we've done everything we said we would do. We've announced
what did you say you would do?
We said that we were going to get a maiden resource estimate out at Calico in 2022, and in February we did that ahead of time, ahead of budget, ahead of schedule. And big 166 million ounces of silver is sitting at Calico. We said that we were going to get a drill program underway to expand that resource to advance that resource. We applied for our permits with the county of San Bernardino, and 6 weeks later we had our drill permits. Now, that shocks a lot of people.
It does, because you kind of get the California overlay thing. Correct. The presumption is, it's difficult.
Exactly.
6 weeks. Okay.
6 weeks. All right. So, where you're operating in California is extremely important. And San Bernardino County is very comfortable with resource and resource development.
Okay, fine. Okay, that's really interesting. So I've got to talk about the market conditions now, right? Okay, so precious metals been beaten up real good for the last 18 months, right? Yeah. We're talking about green shoots. We're talking about entities coming in and looking for where they place their bets. But you're still, nothing's moving, nothing's happened. Yeah. You're still going to move things forward. You're going to advance things, and that costs money. How have you adjusted your thinking about how you allocate your capital?
Yeah, look, I think that, for us, there's been a couple of decisions that we've made. We have ensured that our treasury has been focused on getting the project to the point where we're ready, so that when those green shoots turn into some growth, that we're on people's radar and that we are ready and we're going to benefit from the turn in the market that we know is coming, but we can't predict when.
But the interesting thing about the way when the markets are like this is that the cost of capital becomes super, super important, right? So when you were at your super highs, money's easy to come by. And it was quick as well, right? Yeah. And I don't doubt that money's easy to come by for you and your team, given what your track record is. But it's going to be super, super expensive now, and that needs explaining and articulating to shareholders, going, oh my goodness.
That's exactly right.
I don't like this.
No, so I think the key for us is the fact that we've got a strong treasury, that we are well funded to deliver what we said out to deliver, which was to move those ounces into measured and indicated and get on with some engineering studies.
Right.
Before I need to go back to the market to start to think about recapitalizing. And when we do go back to the market, it's going to be on the back of some significant advancing and increasing of the value of the opportunity at Calico.
But and again, timing's everything.
Absolutely.
Right. Secret sauce here is timing. You can't control the market. You can't control the price of precious metals in the market. You can control the timing and how you allocate the capital. So I'm going to dig in here a little bit, right? Because we've seen so many companies come through here and they've gone from PEA to PFS cost, capital structure has gone up 70%. Yeah. It makes good projects look marginal. We've seen companies make fantastic announcements, 100 grams per ton gold. No one cares. And that's the environment you're working in at the moment. I know you're cognizant of it. Yeah. So again, the timing component, how have you adjusted that and what does that look like now? And why is that smarter or not? As the case may be.
Sure. Look, from a timing perspective, to be honest with you, we really haven't adjusted much. We made sure that we optimized our drill program this year to really focus on what was important. And as a result, we were able to complete that probably 2 weeks ahead of schedule and more importantly, under budget. Which gives us, some more breathing space. We're going to get out to the market with that revised resource estimate in the first quarter, which we've always talked about. Yeah. I can only control what I can control. I can't control the market, and I can't control the timing of the recovery that we think is coming.
Cycles are cycles.
Cycles are cycling, and
we've seen one or two before.
We do, and this industry is. I think I've said this to you before. Yeah, this industry is funny because when the times are good, the champagne will never stop flowing. But when times are bad, you still see people wandering around wanting to slit their wrists. Yeah, we've all lived through. Well, myself, definitely more than one or two of these cycles. Yeah, things are going to turn around. Yeah. The important thing for me is not getting myself and the company into a situation where I'm going to be required to take extremely expensive capital and let that extremely expensive capital benefit from all the hard work that the team has done and all the support that shareholders have given us when we started this venture, only to have some of the real upside benefits revert out to people that are, coming in the event that we need to raise capital.
Take this the right way.
Please.
You've seen one or two cycles.
I have.
So when you're when you're in a situation like this, you can't help but feel a little bit tense, a little bit nervous. Not about the fact, will we cycle out of it? We always do. But when we cycle out of this thing, did you ever think you'd see a day where you had a resource of this size with a company valued at 20 million market cap? Yeah. Or do you just go, well, actually, it's all part of the wash and eyes ahead?
Did I ever think I'd see the day? No, to be honest with you. I think that the downturn that we've seen has been a little bit sharper. And I think that what that shows is that good projects, good teams are caught up in the wash of this downturn. Right. And what that, again, I think means for me is that on those good teams with the good projects, you're going to see a pretty sharp recovery when it does come.
Right. So we can see revised resource. What about technically in terms of your ability to extract efficiently and so forth? How much work are you doing on that to kind of help on the margin component? Right. Because costs have gone up. Sure. One assumes the price of silver will rise. Hopefully, right? Yeah. Who knows? At the moment, it's not doing anything. But you're going to have to look after those percentage points to increase your margin. So, are you doing any work on that yet, or you think actually there's time for that?
Yeah. Look, at the thinking around that has just started, and obviously for us, one of the big costs in the California context is going to be the cost of power. Okay, and so looking at ways, and when you think about any sort of crushing cost, grinding cost, that's a big driver for your power consumption and therefore your costs. So we're starting to look across that landscape and see what technologies are out there that will enable us to lower that power consumption. And, we'll put some actual work programs in place with some technology providers. You'll see announcements coming out of us.
What are the options on the table? Because I'm interested, because not a lot of water. Clearly, it's California. They have obviously lots of discussions around renewables and the efficacy of those and the cost of those. We've seen a couple of nuclear reactors life extensions there. They need it because we're hearing blackouts in California, first world nation. Come on. So what are the options on the table for you?
Well, look at as far as commercial power is concerned, there's the Daggett Solar Complex is, I think, probably in their second or third phase of construction right now. And so we've got commercial, quote unquote, green power next door effectively. Like I say, it's within 3 kilometers. So, that's obviously an option is to go directly and see if there's opportunities to set up some direct offtakes. We can also then look at and the brownout type situation that you mentioned, there's still opportunities for us to look at the installation of some of our own renewables on site to help support that. But it really will come down to making sure we squeeze those processing costs down as low as we possibly can.
Right. Okay. And so right now, again, because like time is money and consultants are money and everything's money right now. So it's kind of, you kind of got to shape what's important now to talk to the market. Give those headlines, although it seems headlines at the moment don't matter. People are kind of listening, but they're not actioning those things. So expectation, green shoots that 2023 does move, get past tax loss season, etc., and maybe the economy starts to find its own way. We've got the midterms out of the way in the US. Do you get a sense that the US is getting its house in order? People will feel a bit more comfortable.
Yeah, look at American politics. I think for people on this side of the pond and for people north of the border, but in a way that like a train wreck is good TV. I'm gonna not really comment on the political situation in the U.S.
Because my concern with juniors, obviously, a huge reliance. Typically, I know you're a little bit different. A huge reliance on retail. And with the economy doing what they're doing, we're seeing a lot of less disposable income, discretionary spend to go on things like investing, because they're worried about paying heating bills and food bills and so forth. So it is a big part of this, the uncertainty. I like the fact that institutionals are coming in because they usually are reading the tea leaves for a year ahead.
Correct.
And people follow it, the momentum comes. But now it feels still an uncertain time. And I thought we'll get the midterms out of the way and it'll feel a little bit better. I'm not sure I got that feeling.
Yeah, I don't think that that event itself has really changed the risk appetite for the retail investor segment. I think that, like you say, the institutions, the large family offices, the more sophisticated investors are looking a little bit further afield, and that's the source of some of the green shoots. But I think there's still a lot of uncertainty for your average retail investor out there, and they're going to sit on the sidelines for a little bit longer. Right.
Your message for your shareholders and anyone looking in and thinking this is a steal is what? Stay the course. We'll cycle out of this along with everyone else, and then we'll show our true colors.
Look, and more broadly speaking, now is a fantastic time to look and be contrarian. There are some fantastic stories out there with some extremely good teams, and we've all suffered with this general market downtrend. And I think if for investors, identify those stories because there's a lot of value out there to be had, I think, right now.
Okay, yourself included.
That goes without saying.
Look, I'm going to say thank you for coming in. I know you're busy. You've got a ton of meetings going on here. It's just kind of important for you guys to just share what's going on in the head, because sometimes strategies change. They need to change, or it makes sense to change because doing the same thing over and over isn't working in this market. But I'm with you. I'm kind of getting that feeling that the big guys are setting themselves up to make moves, and that's appealing because it means that I can follow on their coattails.
Look, exactly. So, when I have the big guys meeting with me at the meeting and starting to talk about, offtake type arrangements, obviously there is some belief that this project is going to move forward. So I'm happy.